Hello everyone, welcome to MoneyPig Trading. Today's topic is quadruple witching day and how it affected the market in the past week and how it's going to affect the market next week as well. Just to highlight our June 2020 alert performance on Twitter. So we sent out 76 in total day trading and the winning number of winning is 53, resulting in 70% of winning rate, which is pretty awesome. For swing trading, so far in June, we sent out 36 alerts, so only 20 winning, resulting in 56%. Day trading this month outperforming swing trading, which is not very surprising, consider how volatile the market is due to the sweet quadruple witching day, which we'll highlight what it is later. So yeah, if you like our content, please give us a follow on Twitter. The handle is MoneyPigTrading. It's the same as YouTube and Instagram. And if you really like our video, please give a like in our YouTube video so the YouTube algorithms can catch the video and recommend it to people who need that. And highly appreciate it. And so really quickly to summarize what we're going to be talking about today is what is quadruple witching day and the recap of VIX, which is a volatility index, and how the SPY market happened, how it performed last week, and how what is the next week outlook. And also the market will continue to be volatile in my humble opinion. I will cover why. And so in my humble opinion, swing trading will be challenging, reduced trading is recommended. And the historical review of the quadruple witching day in 2019, June 21st, and just a summary. Before we start, again, I'm not a registered financial advisor, so all this is my personal opinion. And yeah, if you need any tax or financial advices, please go for a licensed professional for advices. So first of all, what is a quadruple witching? So basically, it's the third week of Friday every month. So there's the third Friday of the month of every quarter in March, June, September, and December. What happens is there will be a simultaneous expiration of single stocks options, single stock futures, single index options, and stock futures. So basically, a lot of options and futures will be covered or exercised, resulting in a very huge volatility. And also big money, especially mutual funds and retirement funds, they need to readjust their positions at the end of each quarter by buying a lot of sell shares or sell a lot of shares. So you can see maybe X stocks got bought like $2 million today, but tomorrow another mutual fund actually might sell $1 billion for that X stocks. So the X the stock price will just like bouncing back and forth like hugely, making it really volatile and difficult to trade. So just look at the VIX. So it is basically a volatility index. The higher it is means the market is expecting more and more volatility. So we can see this Monday, the volatility VIX actually jumped a lot and break this downtrend channel, which is not very surprising. Usually at the week of a quadruple witching day, we'll see this VIX jump up and actually kind of consolidate unless the market finds the direction. So it's the same for SPY, which is the ETF for SP 500. The June 15 week is very choppy. So this is the Thursday, as I meant highlight in the last video and then on Twitter. We see a lot of institute money start to sell SPY at 320.78. And that's why we foresee Thursday is going to have a big sell-off. And the market rebounds and then have a pullback again. So we see Institute actually bought a lot of SPY at 300.7 on market closing. So I was expecting Monday to have a really big rally as I expected. Even though the future market actually pulled back a little bit, I was still pretty confident that the market is going to bounce back. But as you can see, actually from this big money flow, the quadruple witching day, which is this Friday, actually happened. The volatility actually started last Thursday already. So that's why you see a lot of volatility going on. And because of all this information, I actually sent out Twitter alerts on Monday on June 15th to tell my followers to buy SPX June 15 expiration 3050 $1.7. And these are the targets, and that's at 7:46. And very quickly, you can see at 11, which is about 3 hours later Pacific time, we closed that SPX at $20, which is over 1,000% profits, which is pretty awesome. However, the remaining week, Tuesday, Wednesday, Thursday, we call it kangaroo market, which is like bouncing back and forth. It's not really giving any direction, very volatile, not going anywhere. This kind of kangaroo market is always an option killer and kills a lot of premium, especially if you're holding the same week expiration contract. it's just really difficult. Sorry, just to go back, on Friday closing, we see a lot of institute money trying to buy and sell SPY at 310.46. That's a really mixed signal. However, the market actually closed at SPY at 308, which is below this price point. So that's why Friday closing, I was saying the market looks pretty bearish. Because the market is not able to defend this price. However, on the chart, you can see this is a daily SPY chart. We can see there's a long-term bullish channel. SPY is still actually defending this channel's bottom, so it still looks pretty neutral. That's holding up actually at 308. So the actually key level is 306.90, and still holding out above that. So I would say on the chart is pretty neutral. So just to recap the possibility next week. Institute infra money flow is actually pretty mixed. The chart is pretty neutral, but the news is actually quite bearish, right? The COVID cases are soaring in Arizona and Florida, especially in Florida. That should ring a lot of red flags for many stocks, since Florida is the U.S. headquarters for many cruise line like CCL, RCL. And also, a lot of airlines actually operate a lot in Florida, like American Airlines. So that can be a very bearish sign for American Airlines as well. And also, Apple's on Friday actually announced 11 stores will be closed because of the COVID concern. So yeah, the news are generally bearish. The VIX is bearish as well because it breaks the downtrend channel. So I can foresee this volatility probably is going to continue in the next 2 weeks until we enter July. And the signal here is very mixed. Not to mention the option on the money flow side. Thursday, we see a record SPY put options going in early July. But on Friday, we see a lot of money, big money coming in to buy the June 22nd week of call put on SPY. So it's really mixed signal. That's why I foresee the volatility is going to continue. So again, market is probably going to be very volatile in the next 2 weeks. Swing trading is actually going to be very, very challenging. So I actually highly recommend to reduce trading and focus on individual tickers in the kangaroo market like we see on Wednesday to Thursday. So when I said individual ticker, I mean like, for example, ROKU, I see this ticker is going to go up. So I actually send out alerts saying that, hey, June 19 by 11:17 call average 1.6, which is pretty decent. Just by that day, this call alert actually make 150% revenue. And I was expecting this ROKU will continue to go higher. So I hold about half of the position overnight. However, probably, like I said earlier, some institute probably sell the ROKU on Tuesday, can actually bring down this price a lot. Plus, there's option decay, premium decay. That's why, based on my principle, if it is a green trade, which means it's earning money, you don't want to result into losing money. So I actually set a stop limit to take the profit and actually trigger my profit, even though the price actually hold the key level was $116.40 for a while. However, I quickly regret my decision because on Thursday, the price quickly rebounds to 127. If I hold that swing trading, it could be a 500% plus gain. And again, on Friday, the price just kind of bouncing around. So this is a really volatile market. Big money can sell and buy the same ticker name one day and the other. Buy today, sell tomorrow. It's really volatile. And for this kind of weak kangaroo market, focus on the individual ticker. If you find a hit like we do, this Chinese name YY, I didn't see it on Monday. So Monday was trading at $72. On Friday this week, it actually closed almost to $100, $28 point, 25% moving. So Tuesday, I started to notice this ticker that's breaking the range. So that's why I actually send out alerts on Tuesday to tell followers like, hey, consider this YY. And myself, I actually bought the June 26, 90 calls. And actually on Friday, I resold 150% in swing trading, which is pretty decent. So yeah, in this kind of kangaroo market, trying to find this kind of ticker that will, continue breaking the range and continue to trade higher, I think is the winning solution for swing trading. Just to recap, what do I mean by reduced trading? So trading is all about risk management. Imagine if you have total saving of $10,000 and your net income after tax, rents, all the living expenses is $1,000 a month. At least my humble philosophy, what I usually do and what I do is actually is I keep 50% of cash, right? Just in case. This is the type of a world like you never know what's going to happen tomorrow. Like this COVID thing can last until next year. The vaccine can probably won't be in the market until next year. A lot of things can happen. Have cash at hand is always very important. And I typically put like 30% in stocks. Just buy Apple, Facebook, those high quality stocks, which will give you 7% plus or even more. If you have 7% of performance every year, 10 years later, basically your stock portfolio will double. So basically, 30% of $10,000, which is $3,000, will probably double if you get 7% annual return in 10 years. Not to mention, you keep putting 30% of your net income to stock market, just to get more. And I also hold a lot of high dividend stock. That's why you see some alerts, like the Shell. So just to get dividends, hold it long term, so I can grow my portfolio. I only put about 10 to 20% of my whole assets into options because option trading, as you can see, can be hugely profitable from my alerts, but also can be very, very risky. If you put a lot of money in options, maybe you're lucky, make a lot of money the day after. But if you just keep trading, if you're not consistent, you might just lose all the money very quickly. And imagine you just lose your whole saving in option trading. That's going to be very, very miserable. So if you are owning your portfolio like I do, I actually recommend in this kind of volatile market, don't add any more stocks unless we have a clear direction for the market. And also for the options, maybe just use 10% of your total saving just to trade it and open maybe for small account like 1 or 2 swing trading per week. And for day trading, maybe just limit to 1 per day, just to try to limit your exposure to the risk. And not to mention, you don't have to trade every week, every day. If you think the market is really difficult, you can always take a 1 or 2 or even longer time frame off. If you have achieved your goal for the year, make a lot of money, you don't have to continue to trade. Again, just my personal humble opinion that this next 2 weeks is going to be really volatile, hard to trade. Just a quick historical review of June 21st, 2019 quadruple witching day, what happened there. So as you can see, the quadruple witching date on that year is June 21st, which is right here. So that Monday, there's a big gap up and then touch the bullish uptrend upper line here, and then hold up a little bit and try to break up, and then it didn't work. Yeah, you actually have a really big candle, which is very volatile, and the other day try to goes up again, actually close lower. And then the week after, June 24th, you can see actually Monday have a big sell off. Tuesday try to bounce and sell off again. Wednesday kind of consolidate. Thursday goes up. Friday big gap up, and then market close, pull back a little bit after the gap up. Yeah, so it's very volatile after the quadruple witching date at the same time frame last year. So as you can see, that's why I said like this year can be the same thing, very volatile, very hard to trade. And not to mention, the week after here is kind of crying into the upside side, and then kind of consolidate and have a big sellout bouncing back. So after this quadruple witching day, June 1st, the market last year went up actually a lot already, like we do this year. And then we have a really volatile summer, as you can see here. So that's why I'm saying like try to reduce position, because I can foresee a lot of volatility coming through in the next few weeks, especially in the coming 2 weeks. So just to summarize, I believe the chart and money flow and news are disagreeing with each other, so it's a very mixed signal. Can't really make a solid conclusion on which direction the market's going to get. The key level SPY to hold to continue the bull trend are listed here. And market has not priced in the second wave of COVID. So that's why the market is trading very high. Be cautious. If you have long-term equity holding, it's better just to take up some of them for profits. And also, again, it could be a very choppy week next week. If it's really choppy, reduce trading, hold more cash, take profits quicker this week if you're doing day trading. And if you're holding long-term position, try to hedge them. I think the other point I forgot to mention is imagine um, the stock market has bounced back so much, from the drop, right? A lot of people actually got hooked over here. I don't think I have the chart. And yeah, so a lot of people who are actually holding a lot of equities at this SPY level, they actually were trapped when the market was sold off. And now the price started to bounce back at this level. If I were you, I were that person, those people, I would try to take profits, right? So that's why not only the institute are, reposition themselves. I can see a lot of retails are actually trying to, protect themselves by reducing the stakes of holding equities, and that can also, proliferate the volatility here. Thank you for listening, and yeah, I hope you have a good trading week and have a happy Father's Day. And thanks for watching again. Bye bye.